Hello traders, Jason here with swinghigh.com. This is your halftime report. It is Monday, November 2nd, 2009. The big news today is that despite CIT Group filing for bankruptcy, which could have been a huge catalyst for the downside, we have a few things weighing on the bull side that are propping the markets up, and up fairly big. We have the manufacturing ISM data and housing data coming out positive, much better than expected, as well as Ford looking very good with a $1 billion profit and providing a good outlook. Just looking here at Bloomberg Economic Calendar, and this is where I find the ISM Manufacturing Index and the pending home sales. Those are the two reports that beat. The ones with the stars, the reports with the stars next to them, have a lot of importance. Not to say that everything else in here isn't important, but the ones with the stars can really move the market, so pay attention to them more than the others. So that's the news for today. Let's look at the markets. SPY up 1.2%. The diamonds up 1.2% as well. The Qs up 0.9%, some relative weakness there. The Russells up 0.5%, very relatively weak there. And the financials up 1.6%, showing some relative strength. Let's look at the market internals. We have the tick. The tick is relatively neutral today. As you can see, there are an equal number of marks or bars above and below the zero line. If anything, I would say it's a little bit more positive than negative. The trend is looking pretty bearish, actually. Started the day off in bullish territory, came back up here to 1 at neutral, and now we're hovering right around the bearish line of 1.2. Now, that's just a guideline. Anything above 1 means that more volume is flowing into stocks on the decline than on the rise. So that's a little bit bearish right there. The VIX has a nice pullback of 7%, or almost 7%, 6.5%, excuse me, which is normal to see after a 25% or so rally on Friday. It's normal to see a pullback here. In fact, I'm going to drop a Fibonacci line on here. Okay. And we'll go from, excuse me, I'm kind of new to Thinkorswim here. Dropping a Fibonacci, and we have about a 50% retracement on the VIX, which is acting as a nice support level for the VIX. Let's look at SPY and where our support and resistance is today. Right here, I'm looking at a 15-minute chart of SPY. And I just want to do another Fibonacci from the short-term highs to the short-term lows and see where we're sitting right now. Also, finding big resistance at the 105.15 mark. Now that's going to be resistance for a few reasons. 105 is going to be resistance because that's a nice round number of 1050 on the S&P. And 50% retracements are often big resistance or key resistance areas for rallies. You see this is a drop of 100% here, and then a pullback, if you will, to the 50% line. And now we're finding resistance there. I'll explain Fibonacci's more in depth on my site. I'm going to have an educational page put up soon, and I'll teach a little bit more about Fibonacci's and their importance on that page. Let's look at a couple more reasons why we are seeing resistance here real quick. On the daily chart, you can see, excuse me. Okay, real quick, here we are on the daily chart. You can see that at the bottom of this rally day we had on Thursday, the bottom of that candle is acting as resistance quite nicely, and that should be proved to be a good short-term resistance. Thanks for being a part of swinghigh.com. Check back this evening for your post-market analysis.